Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from a beautiful and sunny Denver, Colorado. Today, it's Wednesday, so I'm joined by my friend and fellow Schwab coach, Brent Moores. Good morning, Brent. Good to have you back. How are things today?
Things are great, Kevin. Good to be back in the office. I was out of the office yesterday, and good to be with you. And I appreciate you. You taught a webcast for me, so everybody make sure you check out Kevin's long options webcast yesterday there. So
yeah, you're always going to get a little different approach from each of us coaches individually. So it's not a bad thing when we one of us steps out and the other picks up the show for the other one. So, it's one of the things I love best about our team, obviously, is the teamwork and the ability to manage all the shows that we do, make sure that we get those live hours out to you all every day of the week. Today, everybody, we're joined by Scott Thompson in the chat. So say hey to Scott. He'll manage comments and questions that Brent and I are unable to get to. But of course, we're happy to hear from you. Take a moment and put it in there, comments and questions, things you might like Brent and me to address. We'd be happy to try and do that. So we'll keep an eye on the discussion and chat and try to bring those questions into our conversation as well. You can follow us individually on X, by the way. I'm there at Kevin Horner CS. Brent is Brent Moores CS. And if I'm not mistaken, I think Scott is quite simply Scott Thompson CS. So if not, he'll correct me here in the chat, I'm sure. Let's get to our disclosure details, everybody, so that we can move into the charts with you all. Please remember that our discussion here is exclusively informational and educational. We do not make recommendations. We do not make endorsements for a specific approach to trading the market. We will discuss technical analysis, though, covering some of the topics and concepts that traders might choose to consider or employ in their own trading process. But remember, technical analysis is merely a piece of the puzzle, everybody. We discourage you from basing decisions exclusively off technicals. And then one final note is in regard to options. Today, we're going to maybe be looking at some option pricing on some underlying equities that are doing earnings after the bell today. We got some big names, some ones you're familiar with. So just as a reminder, options carry a higher level of risk. They are not appropriate for all investors, and we'll encourage you to review and be familiar with the characteristics and risks of standardized options document, which you can get from us with a simple phone call, by the way, everybody. Okay. In terms of our agenda, it's going to pretty much be the same, everyone. So we will start with our top-down approach. We'll look at the major indices. We'll look for some sector movements, a little bit of leadership discussion, if you will. And then we move into stocks in the news today, some upgrades, some downgrades. And like I mentioned, some big names after the bell today. We're going to be hearing from Meta. We'll be hearing from Microsoft. So I thought we could set the table a little bit, and we'll employ a look at some option chains, which will help us to understand maybe the expected move that traders might have on these big positions. So with that, Brent, let's kick it off with the S&P 500, a continuation move yesterday. I'm getting a little bored of noting the additional day of the 20-day moving average. Today will be 68 if we maintain it, day 68 above the 20-day moving average. But the trend, Brent, are we getting tired at all? I mean, maybe tired of the discussion, but maybe not the chart growing tired.
I look for when I think that it's a good question because everybody thinks it after a big run, I think. Mm-hmm. And the way I consider it is, hey, look at what it's done. Is it doing anything different now than it has done over the past X number of weeks that we've had the run? And right now, I'm not seeing anything substantially different to indicate a change. So yeah, internally, maybe there's some, fatigue, but for trend traders, and that's like a lot of who we're talking to, trend traders are, the typical approach is until, the trend is the trend until proven otherwise. And right now, it's not showing us anything otherwise here. Now, the trend's not going to last forever, but right now, trend traders are going to ride that bus as long as it's headed downtown or wherever we're headed. I don't know.
Exactly. I'll say I'm not suggesting that the market is ready to fall or pull back in a relative sense or dramatic sense in any way. What I am suggesting, though, is as traders, one of the challenges that we have to battle is this complacency that can come into play from our decision-making process, meaning if we've been above the 20-day moving average for 67, 68 consecutive sessions, chances are traders are excited to buy when they get a chance at the 20-day moving average. And my comment is pretty simple. We don't know how long the trend is going to manage the way that it has been for the last 3+ months. But if we're looking to capitalize on any profits we're sitting on, then it's our job to look for proper exit strategies, whether that be selling into strength or selling into weakness. More importantly, what do you define as that weakness, and where will you start to build cash a little bit? It's the complacency, Brent, that worries me, because as traders, when we're complacent, we tend to just let our portfolio go. We don't protect positions. We don't consider exit strategies. We just go, all right, everything's great. I'm going to stay long. I have nothing to worry about. That's what I want to challenge against.
Good point, Kevin. We need to stay diligent in the market, in our attention to the market, and not fall asleep there as we're going here on this. And because look, when the market falls a lot, then all of a sudden we wake up, and then it's kind of, well, it goes back to the whole greed fear thing. But the challenge is with the greed part of the equation. That is, when the market's doing really well, we tend to just be complacent in terms of being fine with where things are and not making preparations. And then, of course, when it falls, then the fear thing, sometimes we flip the other way, and then we do panic stuff, which isn't as good as either. So that goes to your point of, let's consider it now and have your plan ahead of time.
Yeah, I don't know about you, Brent, but when I make those panic decisions, they rarely work well for me. So I'm just trying to avoid making a decision hastily. And I found that if I set myself up along the way and I make some notes on my chart and say things like, oh, if we fall to this level, make sure you take action. If we're here at a close, make sure you do something here. Those types of things can make your decision in the moment a lot easier and less hasty, which is ultimately what we're shooting for here, right?
Yep. And in the chat, Jay Richardson said, we have to manage emotions even during a complacent market. It's our job never to be complacent. Absolutely. Amen there. Yes.
Yeah. Okay, so for the time being, S&P continues to do what it's been doing. There's no reason to necessarily shift in terms of the trend. So right now, if you're basing decisions off of a trend change, you don't as of yet have it just yet. So we'll stay the course in many cases and monitor for a trend change. Now, in the NDX, it's going to be a lot of the same, Brent.
Yeah.
We've led, of course, by technology. You can see the instances with my ovals here leading us higher. Tests of the 20-day moving average have been opportunities to join the trend. Again, Brent, there is really nothing on this daily chart that would signal traders that of an impending drop, pullback, reversal, any of that stuff on this chart.
No, we've been having higher highs and higher lows, and that's the key makeup of an upward trend. You can see the strength of the trend reflected in that RSI at the bottom of the page as well. Anytime you're kind of hanging out above or right at that 70 level, we've had a strong trend. But you know what? You don't even need that, to be honest. If you just have that 20-day moving average on there, heck, you could put a 10-day moving average on there, Kevin, and you'd see something that's pretty similar on there. There's a 10-day, and if we're above the 10-day for the better part of what, three months now, that's a strong trend.
You're absolutely right. Even if you wanted to use just the 10-day, the bouts below the 10 have been very limited. I mean, at least going back to the 23rd when we tested that horizontal support line there, that we've been above the 10-day very cleanly since then. So that's like a month already. That June 23rd, that's 5 weeks now above the 10-day. So that's getting crazy already. So again, consistency in trend, not fighting against it regardless. I'll offer up one final note here, everybody. If you are looking at the trends in these major indices, if you're feeling as though the trends cannot continue and you're wondering if you should be looking bearishly, we'll just simply remind ourselves that bearish trades we don't have to take bearish positions to be bearish. You can be bearish by simply building cash and reducing position size. You don't have to take trades that are going against trend. for a lot of traders, they may want to take bearish opportunities, but they'll be patient until we get the true shift in trend. We are appearing to be, Brent, still a ways off from anything like that, but I know that tonight's aftermarket is going to have a pretty healthy impact on what the NASDAQ does the rest of the week, I would imagine.
Absolutely. Let me just address a question in the chat too, Kevin,
Please.
because I think it's relevant. In a commuter, regarding taking action at the close, what does that mean to take action? Does that mean we're going to take action the next open of the market, or can we take it a little bit before the close of the day? I would say my take, and obviously there's different approaches to the market, whatever you feel appropriate. And a lot of times when we talk about rules, sometimes you'll hear us refer to hold rules, close above the high of the low day. When we look at close, a lot of times traders are not actually waiting for the close before they take action on something. So no, you do not have to wait for the close on these. If whatever your rules are, fit in your rules. Kevin and I are not here to direct anybody on their rules. We're here to encourage you to have rules and to follow your own rules, no doubt. And so, yeah, I think you have our blessing in terms of following your rules there on that regard.
I think you nailed it, Brent. Yeah, our goal here is to encourage that. Have rules, define your rules, and then stick to your rules. We'll give you examples of things that traders might do, but that's all they are. Just examples, not recommendations, obviously. And we want you to have something that makes sense to you in terms of your comfort. We know that not all traders are going to take approach that is 100% invested and then 100% uninvested, right? Many traders go about their process by piecing in to the trades, piecing out of the trades, aids them in managing their emotions. But the percentages of those trades like that you step into, that is a process that you got to build for yourself, and ultimately comes down to your own comfort zone in terms of having that money devoted to the market at any given moment. So good reminder, though, Brent. We say it all the time. We don't make recommendations, but we give examples that maybe traders can balance against their own thoughts, their own process. Okay, so we know we've got leadership there. NASDAQ 100 has been quite strong. Let's look at the Russell. We are leading of the big three, leading with the Russell today. It looks like we've got some support set up in here, Brent, but we've gone really just sideways the last few weeks here. Anything notable about the recent trend here off of these recent lows?
I don't know. I mean, it's the Russell has underperformed for really years, but I take encouragement in terms of for small caps, because that's what we're talking about here. Russell 2000 is small caps. That the last 3 months or so have actually been, as you mentioned, haven't had the strongest last couple weeks here, but for the most part, from those lows, those April lows, it's held its own there, and that's different than what we've seen for quite a long time. And so a little bit more market breadth in that regard. In terms of, there's different ways to measure market breadth. We can talk about just numbers of stocks of large caps participating in the rally. Sometimes we do that. Talk about different sectors and how many different sectors are talking about a move. Or here the distinction is large cap to small cap. And for the most part, I think it's been more encouraging for small caps over the past 3 months or so.
It really has, playing quite a bit of catch up with the rest of the broader market here. And, traditionally small caps don't lead unless the market is really healthy. So, the fact that we've had a nice bounce is great, but even though we've had that good move, all of this action up to this ledge, ultimately, Brent, we are making right now at least lower highs in the longer range. The resistance above us at around 23.15, as I've called out, is significant and would tell us about the opportunity for more upside in small caps, but that is still quite a ways off. I mean, we would need about a 100-point rally, about a 75-point rally from where we are here in the Russell to break through that area. So that would be a significant development if it occurred, though, Brent. Alternatively, though, of course, the 200-day resides right beneath us, and any close below the 20-day may very well bring us back there to the confluence of the 50 and the 20, which could be maybe a nice little spot for traders to join in if we found ourselves there.
Yeah, big distinction between this chart and S&P or NASDAQ. S&P and NASDAQ are both, I think yesterday we hit all-time highs on both of them. Not obviously you don't have to go past this chart to see that clearly we're far short of that on small caps.
Yes, we are. Okay, one other thing to hit up here as we're talking small caps, let's talk rates real briefly. The one thing that's notable about the 10-year note of late has been this just going nowhere action. I know that there's a lot of up and down, a lot of back and fill, but Brent, when you look at what's gone on in this most recent, say, back since April, since things got squirrely with the tariff tantrum discussion, things have really settled down. And rates have kind of are now in the middle of that range from the April low to the high we made in May. And we're right smack dab in the middle of it. Does it feel to you like the market has digested this higher rate environment and said, all right, we're growing more comfortable, largely because we're not seeing significant jumps like we saw back here in the fall? September to our peak in early January was a substantial move, very speedy.
Yeah, I mean, it does seem like we're range bound, and it does seem like the market is kind of comfortable with, given the economic data we have, of having rates kind of in this 4.3, 4.4 range, something like that. Now that can change, but not. And I think most people want to see lower rates. Businesses. When we talk about the 10-year, and that's what we're looking at here, because when we talk about interest rates, there's a lot of different rates. There's shorter term rates, there's longer term rates. Right. But really kind of the key rate for a lot of people, think of mortgages, think of companies, corporate debt. This is kind of the 10-year is something that they look at, because this is kind of a little bit more indicative of, more correlated to like mortgage rates than say a Fed funds rate or something like that. Mm-hmm. And so that's a concern to people, and people kind of want to see it lower, but it's not always a great scenario for it to drop way down, because one reason it could drop way down possibly is if we see a lot of economic weakness. And so, right now it seems like we're comfy. We have a FOMC meeting here today. And that is, and you right on cue, you have the CME FedWatch tool here. And, by all accounts, pretty much, I guess there's that 3% there, according to the market, that there'll be a cut. That would be a big shocker in the market right now in terms of the Fed funds rate. And so, we'll see what happens. But really what people are looking to that too is not, any rate change for today probably, but some indication of what's going to happen in September and possibly later in the year.
Yeah, that's right. We know the administration would like to see a cut here, not just 25. If you listen to the president, he'd like a full 100-point cut, if not more. Now, this, again, is not by any stretch what is going to happen, everybody. We need to point out that this is merely how traders are positioning here at this point for today's announcement. Now, if we go forward to September's announcement window, you'll see a significant shift. At the moment, the expectation is for a cut in the September period at a nearly 60% level. The question is it just a 25 basis point cut? And this is where, you're going to see some machination between now and September, obviously, based on data that comes out, right, Brent? So it wouldn't be a terrible idea to just continue to monitor this, but ultimately the expectation as far as traders are concerned, everyone, if we go to December, you'll notice that these you'll get more action in here as we go further into the end of the year. End of the year, there's actually a 19% chance of being about 75 basis points lower, Brent. So there's some expectation that the Fed needs to act here between now and the end of the year. That's how I think traders are taking the look at the Fed right now.
Yeah, I think that's the expectation. And you can see there's a lot of variability of potential outcome here looking at this as we look later in the year. But as you kind of alluded to, Kevin, as we get closer to the time, because I think you're on December there, as you get closer to December, I suspect, you'll see one of those bars, histograms or whatever, it go much higher than where it is now, and there'll be more clarity. As it's like a weather forecast. As you get closer to a day, there's more clarity as to what's going to happen there.
That's right. With more data, we have more understanding of expectation, obviously. And Brent, just curious. I mean, there's a question in the chat here about expectations. Obviously, when you have such high expectation for no change today, would a shift, a cut today, do you think, this is speculative in terms of commentary, but do you think that'd be taken negatively or positively today?
I think it'd probably be taken positively. Now, I'm no expert at this. I think the market would like to see a rate cut there. And I'm not, and by the way, that doesn't necessarily mean that's what's best, for the overall economic situation. But I think for the market itself, I think the market would likely rally off of an unexpected rate cut today. But who knows? And that would, that's short term, we just never know on that. But really, I think we'll see. And by the way, it's not necessarily unanimous. You'll probably get some dissenters, I would guess, maybe today on that, which isn't always the case. So, I think Waller will probably dissent and want a rate cut today. But anyway, we'll see.
There's always, we have plenty we can parse out after the announcement. That much is true. Hey, Brent, we got semis moving again. We're up 1%. We've been trying to break out here. We've had a number of tests at this upper range and just haven't really moved higher. So we've been kind of 2 weeks or so in about a 250-point semiconductor range on this indice. I talked earlier in the week about how we'd come back to the 20-day. We're below it for a little bit, but ultimately no trend shift here just yet either.
No, leader, and this is one part of the market that's probably helping propel the market up. We've had a strong market. We've already seen that. NASDAQ is strong. SOX is a big part of the NASDAQ. Probably no surprise here in what we've seen on the SOX index.
Yeah, no surprise at all, really. The leadership here has been strong, and it's good that the group has been back in gear. It's given us a lift. The question is whether we can maintain, obviously. Look at this, 71% on the index load from the trough to the peak here, Brent. A pretty good move over about 4 months. Not bad at all.
No, 71% over 4 months is not bad on pretty much anything there. So, that's... so some point that will break and the trend will change. But right now, trend traders are liking this and are probably going to say, a lot of trend traders will say, hey, as long as the trend is going up, we'll try and participate in that.
That's typically the way it works. Yeah. Now let's see how some of these other areas of the market are moving today. Thought we'd peek in on oil and see how that's going. There's been a bit of a change in oil in the sense that we've had some support tests of late here at my green line, and then we rallied up. Oil was off a little earlier, but now it's rallied off of support, the intraday low here. Brent, this is not necessarily a fantastic development if we're trying to keep inflation in check.
Yeah, I mean, that's a big input cost, not just to consumers and you at the pump, but for companies and shipping and whatnot, and energy generation makes it more expensive. And so we'll see. By the way, we've got a PCE number tomorrow, I believe. And so that will, that obviously that's different than this right now, but just talking about inflation, that is, that's a concern in the market right now is inflation. In fact, that is presumably one reason why the Fed is less likely to cut right now is still lingering concerns about inflation. And so, let's see, the 31st, anyway, so inflation is a concern, and higher gas prices do not help us in that regard there.
They do not, at least not in that regard. You're absolutely right. I thought this was a pretty big move in the candle there yesterday. We'll see. Does this make it, does it clear the $70 a barrel level today? If so, there could be some more short-term upside that bears monitoring, of course. Energy as a group still kind of mired in this upward channel, this rangy kind of a rising wedge that, if you were looking at it from a technical basis, there's plenty of reasons to say it's not a bullish looking chart at the moment, but it's also not a trend that's very easy to discern because the majority of the trend, the easiest portion of the trend is really what's happened since April because we're kind of stuck in this channel range. Brent, we're also getting a big move today in utilities. That's kind of a shock to me. I don't know how. I mean, we're digesting a yield pop by 1%, so yields are up and utilities are up. Typically, those two go opposite of one another, I've noted, of late at least. This is a kind of a significant development, though. Utilities in a leadership position, again, implies expectation for lower rates over the intermediate term would be my expectation. What are your thoughts?
That'd be my best explanation for it as well. Utilities, which tend to be pretty interest rate sensitive. In fact, of all the sectors, probably the most interest rate sensitive, I would say, sector, for a couple reasons. Utilities usually have a lot of debt or debt dependent, and so interest rates affect their business quite a bit. And also, utilities are often bought by investors. They're attractive to investors because they pay a pretty good yield typically and are used. And if competitive rates are lower, then utilities become more attractive. Whereas if you could get a very high rate just in treasuries or something like that, it makes maybe a little less of a case to go into utilities. So yeah, I mean, that'd be my biggest explanation. So it is kind of weird that today, at least, we're seeing this divergence in yields and what utilities are doing, but utilities are strong today.
They are, and it's entirely true that Wayne's bringing up a good point.
Yeah, good
Utilities
point.
have also benefited quite a bit from the underlying build out of AI infrastructure and the need for power, and that's a big part of this as well. From the technical aspect, the only other thing I wanted to look at, Brent, this is a big range we were in. If we looked at this on the weekly, boy, does that look significant. Let me clear those drawing sets real quick and just point out, look, this is the level we moved through, took the lid off the group. This is a bullish development for that space, and a big, big level was taken out. So can we continue to trend from here? Can utilities continue to move to the upside? The broken resistance to the upside suggests potentially yes.
Yes, and that's a strong, I mean, that's a long-term trend that that a 20-day or 20 period, which is a 20-week moving average, which is same as a 100-day moving average. You can see we're well above that, and then we just go. The 40 period would be, the purple line would be a 200-day moving average. So those are longer-term moving averages we're looking at here, and you can see that long-term trend keeps on moving.
It does. There's a good one in the queue here again. If we're looking for rate cuts, wouldn't that be bullish for the Russell 2000 since many of those companies borrow? And the answer to that is yes, absolutely. That is kind of the expectation of maybe some of why we've seen the Russell rally the way that we have. Kind of a twofold scenario, I would think, Brent. One, expectation of lower rates versus where we've been. And two, the idea that what has been tabled in the last 6-9 months has been that discussion of a recession that got pushed off to the sidelines. We haven't heard that word in quite a few months, have we?
Yeah, you're correct. I think most people are kind of discounting that right now, and that can certainly move small caps too. It's not all interest rates, and same thing with utilities too. It's not all interest rates. A stronger economy requires more utilities. A stronger economy is going to benefit small caps as well, and so that can be a thing too. But yeah, I mean, the RUT would tend to benefit from a lower rates, both on the overnight overnight rate, as mentioned in the chat, but also on longer term rates too.
Mm-hmm. That's a good point. Bob states the last time the Fed cut short-term rates, the long-term rates went up.
Absolutely.
And in fact, rates did. I remember it. We got the rate cut. I think we got that rate cut
in June of last year, I think.
Yeah, it was like down in this area, and the rates just rallied aggressively following that.
Oh yeah, yeah. No, it was like to the day. It just like it went completely opposite. So good point there, Bob. And so in the long run, in fact, I pulled up a chart. It's probably a little bit too much to pull it up right now, but I overlaid the Fed funds rate and the 10-year and compared the two. And in general, they tend to go the same direction.
Mm-hmm.
But as Bob pointed out, that's not always the case. And so it just shows the short-term Fed funds rate does not necessarily indicate what direction the longer-term rate is going to go.
Yeah, that's entirely true. We can be surprised by the market from time to time. It's not hard, not too hard. Brent, let's hit up those couple of those big guys like we mentioned, Microsoft, Meta, reporting
earnings.
Thought we should look at those real briefly, and then we'll get to some upgrades today. Starting with Microsoft, which has just been crushing to the upside. My goodness, this got going at what a shock. Same day. April 23rd, it recovered this 20-day moving average and has been above it ever since. Microsoft has been super strong. We've got earnings after the bell. If we take a look at the breakdown of the weekly options expiring on Friday, let's take a quick look at the money straddle, which I'm just going to put this down to about 10 contracts. So we're at 512. So there is a 512 and a half. Looks like about a 21-point spread there, Brent. About 10 and a half either way. So 20-21 bucks is expectation of move approximately. Now that remind us that goes either way. I mean, and then but by no means is that a guarantee that we're going to get a 20-point move one way or the other.
Correct. Let me just back up real quick here. Let me just say this. Just because we're looking at options here doesn't mean this doesn't apply to everybody. And not because I'm encouraging anybody to be an options trader. What I'm saying is this gives us an indication of what the underlying stock will do. So even if you just care about stocks and you're going, how much is market pricing in a move on Microsoft here? That's what we're talking about here. And so, yeah, you add up the call side, you add up the put side, or if you wanted to, you can go to where it says spread above the option chain there where it says single and change that to straddle, and you can do that there. You look at the price that's closest to where the current price is, about 512 and a half, and you can see it does the math for you. Not that the math is that complex, you're just adding two numbers together, but yeah, just a little bit over $20. That's what the market is pricing in for a move. Now, the market may move more than that, may move less than that, but that gives you an indication there of what we're looking at here in terms of the move.
Honestly, Brent, it's a little muted. That I did the math. It's only about a 4% move, and commonly, especially in tech stocks, we see those expected moves in the ballpark of 7, 8, 9, 10%, if not more, on an earnings announcement. So it's a little intriguing to me because the implied volatility is not so high in this instance that the expectations are for a massive move. Extreme elevated IV, for example, would give traders reasons to maybe consider, selling options rather than buying options. But this may not be that. I mean, again, that rate is kind of limited in scope. If you were to evaluate, Brent, combining the 20-point opportunity in theory and with what we've seen from the trend, ultimately, is the 50-day moving average in play on a break of the 20? I mean, is that what we have to maybe give consideration to in terms of finding some short-term support? If it
so if we take that 20-point move, subtract it from where the current price is, that'd be about roughly 590. 20-day is 50-day, is just a little bit below that. So. Yep. Yeah, that's a potential support area. And by the way, like Kevin, if you switch that RSI at the bottom with a implied volatility,
can do.
You can also kind of get a sense for how big a move we're looking at today, this time around versus the last time. So you can see where the IV is right now. This is an average IV. It's not just for this, but it gives you a sense for things maybe. This is just maybe a little less precise way of doing what we were doing there, but it gives you a sense. IV right now is about 25. If you just put your cursor over the IV over last earnings, and you can see where the IV is there.
It was higher.
Yeah, about 32. So that I would was expecting a bigger move, and you can do that in history if you want to do it. There's a lot of different ways to do it here on this, but I think the straddle pricing is a good, easy way to just kind of see what kind of how big a move we're doing, rather than just saying, oh, it's Microsoft, it's going to move a lot, it's a tech stock. Well, by looking at what we saw, we can actually quantify that, and maybe it's not going to be as big as you would have expected.
Exactly the thought process, Brent. Thank you. Now, there's another question in the queue about the chances, the potential for Microsoft to retrace back to when it gapped, which was the big gap on the last earnings here at around 425, the low. It's always a possibility, Brent, but in many cases, we're going to get some signals long before that, right? We don't have to expect a 90-point drop. A lot of traders would choose to lighten up any long Microsoft positions on a single close below the 20-day, or maybe a series of closes there. And then some more would sell further on a close or two below the 50-day. You can have those ideas, but the odds of getting back to that gap zone increase as we go lower, as we take out some of these trends. What else should we be monitoring here?
From a technical standpoint, I think that's it. You just got to set your levels on that. And now let's say you're a longer term trader. So typically in this webcast, we're talking more, shorter term trading.
Sure.
But let's say you're a longer term investor and you're going, what are the fortunes of Microsoft? You can get technical signals. And as we break some of those longer term areas, like there's a significant support level, it's well below where the stock is, but that would be quite a move to get all the way down there. That you may start to see, you could look for a degradation of the financials as well. It's not a good short-term signal, because the technicals will tell you quicker, most likely, than what the fundamentals will do. But for longer term investors, they can look for longer term trends in terms of things like earnings and margins and stuff like that. That can help them if you're making a longer term decision. But for shorter term, intermediate term traders, exactly what you said, Kevin. Pick up those spots there. In the chat, David said, look at the probability cone. You can look, there's different ways. This is a good point, David. I'm glad you brought this up, because there's different ways to approach the market. You can do a purely technical approach, which is kind of what we typically do in this webcast more. You can do more of a fundamental approach. What you can also do is a probability statistical approach, and that's what this is right here. This is a probability cone right here. And using this, you can see, you put in your symbol, Microsoft, and on the x-axis, so that's the horizontal axis, the far left of the cone is today, basically. And as you go further out in time, it goes further right. You can see 20 days in the future, 30 days, 40 days, etc. And you can see the probability of the stock moving up or down gets wider and wider. That's that kind of parabola shape, the farther out into the future you get. If you want to quantify that, you can put your cursor on any point on that graph there, and you'll see little crosshairs on that. Maybe a little hard to see, but you'll see a percentage right where the crosshairs are. That's saying, oh, there's about an 83% chance it's above that level, about a 16% chance it's below that level. And you can do that for anywhere on this graph if you want to kind of look from a probability approach as to what the likelihood is the stock is going to be of a particular level. Now, probabilities aren't fate. They're not guarantees. And so we don't know where it's going to be, but this is just kind of using statistics. But can you guys think maybe this is another tool I could add to my arsenal of trying to come up with a forecast for the market. Maybe you can. And so this is probably not a bad thing to look at here. And credit to David for mentioning that. I wasn't going to think to bring that up without him mentioning that there.
No, it's a great point. I don't think enough traders look at probabilities. You know, we say this frequently. The market is all probabilities. Our job is to digest the probabilities and then position ourselves properly and recognize that the probabilities don't always play out the way that you would infer that they should. That's what the market is, Brent. It's a series of probabilities, and we try to position ourselves properly along the way to meet those.
Yeah, and just another thing, you'll notice the parabola, which represents basically a 1 standard deviation move. It's nice and symmetrical there, right? Yeah. It's not saying, oh, Microsoft has been in a nice trend, therefore I'm expecting the trend to continue. It doesn't think that way. That's not how probabilities work on that. And so if you're going to combine a technical approach, you may consider that trend. You can add in the probability approach as well, but realize they're giving you different looks at something. Technicals, you're going to factor in trends and support resistance levels, stuff like that. Probability, not so much.
All right, Brent. So a quick hit on Meta, just a peek in on expectation of move. We'll check out the straddle here. At the money straddle around 700 is 44. Much bigger expectation of move. Of course, price action bears an impact here, but this is what I was talking about. You know, the Microsoft move was 67% IV. This is 97%. So clearly higher volatility in Meta.
Yeah, so there's going to be a general correlation between the level of that implied volatility and the potential magnitude of that move. And so we'll see. Meta is taking AI engineers from other firms right now. And we'll see how that plays out for them.
And paying them like NFL players, it would seem.
Yes, they are. Yep.
Okay, an upgrade today. Spotify got upgraded. I had a potential head and shoulder top drawn in here, Brent. Broke the head and shoulder neckline, it looks like, with that move yesterday. They got upgraded at DZ Bank to hold, had been a sell. Price target is 652. But from a technical perspective, Brent, stock's going to have to get back above the neckline at 670 approximately to invalidate this move. Otherwise, we're more likely to see the 200-day moving average around 564.
Yeah, that's more of a bearish pattern, though, that head and shoulders pattern. And so we'll see. Spotify has been, I think, we're not going to go into it right now because we don't have time, but the valuations are fairly high on Spotify. But it's, maybe deservedly so. It's been a very strong company fundamentally, but this technical pattern is a relatively bearish pattern.
Yeah, short-term bearish, see if it corrects itself. Yeah. But ultimately, if you get short-term bearishness and you want to be bullish, it makes sense to allow the stock some time, and you want to force the traders to put the price action back in charge. You want to basically be comfortable to be back into a position like that when a trend reasserts itself. Right now, that means you got to get over that 670 zone initially. There was a big downgrade by a number of companies here on Novo Nordisk. I thought we'd note this. It's not exactly a great looking chart. It's a healthy reminder, Brent, that downtrends are downtrends until otherwise noted. And this is a good example of that. They got downgraded at Barclays to equal weight. They had been at overweight. They got downgraded at Bank of America to neutral, had been a buy. Not a great situation here. And it's, like I said, just a wonderful reminder of how things can shift dramatically. If you were looking at this on the weekly, though, Brent, boy, there has been very little reason over the last few months to be long NVO.
You're correct on that. So the good thing is, if you have been looking at that, you probably want to be in the position right now. Interesting downgrades because they actually occurred just a little bit before. I mean, it has earnings, I'm showing, on the 6th. So it's still a week away from earnings, but you're getting the downgrades ahead of time on that. And anyway, I'm not sure what it was, but it's
all tied to Wegovy. And estimates on Wegovy, getting cut for the 2026-27 calendar years. So inevitably, the market discounts everything 9 to 12 months into the future. And ultimately, I think that's where we are as it relates to NVO here, probably. So, and then UPS did had their earnings, and those were poorly received. They got downgraded as well. This is less excitable for us, Brent, when we think about the importance of UPS as a company in our country, what they do for us. This is kind of notable, isn't it?
It is. I mean, these are the guys that ship for a lot of people. A little less so with Amazon now than it once was, but Amazon's taking market share and whatnot. But yeah, that's not a great forecast for UPS, or it's generally we want to see shippers strong here. That's a good sign.
Yeah.
That's part of that whole transportation, thesis of transportation helps to be an economic indicator for us.
Yep.
So,
yeah,
but it's just one data point among
just one, but notable nonetheless. Yep. Two downgrades there from Bank of America and Vertical Research on UPS both. So, Brent, we're gonna have to wrap it up right there, man. It's always a wonderful discussion today. Thank you so much. Thanks to all of you for being here. We had a great discussion in the chat, obviously. Wonderful back and forth. Thanks to Scott for managing things there. You can follow us on X. Don't forget to make sure you're subscribed to the channel. And if you liked our conversation today, we'd appreciate you hitting that thumbs up down below. We're going to get this reviewed and archived for y'all shortly. That'll help us out on the replay. So hope you all have a great rest of your Wednesday, everybody. We look forward to seeing you again real soon.